Cathie Wood, renowned for her innovative investment approaches, has unveiled a groundbreaking insight that reverberates throughout the financial sphere. Don't forget to subscribe to the channel, give this video a thumbs up, and join the conversation in the comments section below.
If you look at our portfolios, what we're trying to capitalize on with a Palantir, for example, are the next stages of this AI revolution. What we're seeing in the GPU side of things is Nvidia, all praise to Jensen Huang. I mean, just unbelievable company execution, vision, and so forth. And it's not over. It's going to last a long time. But there are going to be many other companies benefiting from AI. The productivity lift alone is going to be massive, the most massive productivity lift in history, we believe. And so this AI revolution is going to be broad-based and is going to benefit a lot of companies. On the GPU side, of course, we have AMD as competition, but many people do not understand that there's a lot of other surreptitious competition evolving out there. Each of the hyperscalers is evolving its own chip strategy. You have a Tesla that has designed its own chip for an AI chip for the more specialized autonomous driving opportunity. And I think you're going to see a lot of companies developing more specialized chips. We know that Nvidia, of course, will segment the market as well. So we just think that a lot of the assumptions for Nvidia, that this is Nvidia's market and it's alone, that those are changing. So a very big story there, but this is simply a cyclical call, and it has to do with that word shortage. And TSMC, for example, Broadcom reported last night. I listened to that call. In the semiconductor solutions part of their business, they were up only 4%, AI up 35%, but everything else down. So there are some cyclical phenomena out there that we think are they're not being integrated into the short-term expectations for a number of stocks. 75, and this is what portfolio managers do. We have a 5-year investment time horizon for Tesla, and our price expectations from here, I mean, we see roughly a 7 to 10-fold increase. I know we're in the process of revising our model, so I'm not at liberty to give you the new number. But
would that new number be higher or lower than 2000?
Well, we're pushing it out a year, and therefore it will be higher because the autonomous taxi platform opportunity will be in full force, we think, and we believe that Tesla will get the lion's share of that market here in the U.S., if not elsewhere. Autonomous taxi platforms are SaaS models. Tesla's current gross margin is, well, it's in the teens right now because it's been cutting prices, but we think normalized, the EV margin is in the 30% range. SaaS margins are in the 80% range. Most analysts focusing on the stock have nothing in their models, or very little, for autonomous. Our confidence that autonomous is going to happen has increased because it has happened. We see Waymo successful. We see a lot of success and commercial success, that is, in China. It can be done. We think Tesla will launch a national service. And Tesla, this is where AI comes in. Tesla has orders of magnitude more data than all of the other auto and tech companies going after this market combined. And what's important about that is that it has corner cases that nobody else has. Rare occurrences on the roads that it has recorded and it is prepared for, but others aren't.
Let's comment on her words. Also subscribe to the channel and put likes under these videos. I think she is right, but there are many flaws in her words. Moreover, there's substantial investment in tech, with billions pouring into startups and innovations. While this propels us forward, it also implies disruptions for traditional businesses and jobs. It's a double-edged sword, offering incredible advancements and opportunities on one side, while presenting uncertainty and the challenge of adapting to a rapidly changing landscape on the other. An additional point of interest is the role of digital currencies and blockchain. Beyond the trendy tech buzz, experts argue that the rise of digital currencies could challenge traditional banking systems and alter how governments manage monetary policy. However, it's not all negative. With challenges come opportunities, and the tech revolution is opening new markets, creating jobs in unforeseen areas, and driving efficiency and sustainability. Navigating this change requires a smart approach, utilizing technology to benefit our economies while ensuring inclusivity. To truly grasp the current situation, let's rewind to the 1970s, a period marked by significant economic challenges.
Focused on the technology, and as is he. He is the inventor of our age, and this age is a very special age because the 5 major innovation platforms around which we have centered our research are converging, and 3 of them he is helping to converge. This autonomous taxi platform opportunity is the convergence of robotics. Autonomous vehicles are robots. Energy storage, they will be electric.
Right.
And artificial intelligence, where those are 3 separate S-curves feeding each other, and should lead to super exponential growth. He has understood this idea that technologies are going to converge with one another. And that is the way he's been thinking. He's first principles research. Just because something's been done one way for a very long time, think autos, doesn't mean it's going to remain that way. And that's why he's going to win. Automatic pilot, they are just scaling. And what he is doing is becoming, the manufacturer of factories. He's trying to figure out how to automate and continue to drive down the costs there. His focus is on autonomous now, certainly. And of course, you can say on X he's distracted, but he's really more focused on the innovation. How can I go back to the future where I started, which was in the payments app space, sold to PayPal? How can I turn this into not only a payments app, but an everything app? And I think he's hard at work doing that in ways that we don't know yet.
In the aftermath of the Vietnam War, an era of ambitious social programs under the Great Society banner triggered a cycle of extravagant spending, creating serious financial challenges, including skyrocketing inflation and an unstable economy. This period witnessed significant fiscal and monetary maneuvers attempting to stabilize the situation, but often resulting in increased turbulence. Fast for comparing the current situation to the economic chaos of the 1970s. Cathie Wood suggests that while that era was tumultuous, the current scenario might indicate the potential for something even more severe. Despite the fiscal and monetary frenzy of the 1970s, there was a sense of proactive measures being taken to address the challenges head-on. This historical perspective is crucial, emphasizing that although history doesn't repeat itself precisely, it often exhibits similar patterns. Now, transitioning to the topic of inflation, Cathie Wood expresses strong opinions on how it is being managed, drawing parallels to Chairman Volcker's renowned efforts to control inflation in the late 20th century. She emphasizes that the contemporary global landscape is vastly different. In today's interconnected world, with complex challenges and interwoven economies, tackling inflation requires a more nuanced approach. Cathie Wood raises concerns that those in charge may be looking to the past for solutions, aiming to replicate Volcker's actions without considering the evolved dynamics and intricacies of the current economic puzzle. However, navigating the current inflation battle is far from simple. It's entangled with various global issues, ranging from supply chain disruptions to shifts in energy consumption and the economic impact of diseases like COVID-19. When Cathie Wood addresses inflation, she underscores the need for innovative solutions tailored to contemporary challenges. Using outdated approaches for new problems is not effective. The economic hurdles we confront now demand fresh ideas and strategies. The significance of this lies in the potential repercussions, impacting everything from grocery prices to job security. Now, let's delve into the crucial aspect of preparing for a substantial economic shift that many may not have experienced before. Cathie Wood signals turbulent times ahead, akin to an economic apocalypse not yet widely recognized. How does one prepare for the unforeseen? Staying informed is paramount. It goes beyond monitoring stock market fluctuations. It involves deciphering complex economic signals to grasp the true state of affairs. While the abundance of jargon and numbers may seem overwhelming, the key is to focus on the broader picture. Smart financial management is another vital component of preparation. Now is not the time for reckless spending or risky ventures. It's about exercising caution, diversifying investments, and establishing an emergency savings cushion. A diversified portfolio helps avoid putting all financial resources in one place. Cultivating emergency savings acts as a safety net to weather unexpected challenges. Furthermore, prioritizing long-term financial health is essential. It's easy to be consumed by day-to-day concerns or succumb to panic during economic downturns. However, making decisions with a future-oriented mindset, such as saving for retirement and investing in assets with long-term growth potential, is key to weathering uncertainties. In conclusion, preparing for an invisible economic challenge involves making informed, careful decisions. It's about safeguarding personal and financial well-being regardless of the impending circumstances. What are your opinions on Cathie's predictions? Do you believe an economic apocalypse is imminent, or do you see ways to mitigate its impact? Share your thoughts in the comments below. Please subscribe to the channel and put a like under this video. Have a great day.